Welcome back to 02 Million Crypto. My name is GC. We are live. Yes, we are live. Joining me before I gotta get into some physiotherapy. Today, let's talk about a few different topics that are kind of in the mainstream for the crypto market right now. The first thing I want to talk about is Sam Bankman-Fried. So now he's finally being put on trial after almost a year of basically no news on what was going to happen to him since the FTX fallout. Now, why is this important? Sam Bankman-Fried and what he did with FTX was probably the biggest heist of money and crypto that has ever happened in history. It's probably an even bigger deal than something like the collapse of Lehman Brothers, because we're talking about the new age of money, where young people, especially young people, are all looking for a way to escape this centralized system that we've had that doesn't work. If you believe that the system that we are in right now works, obviously you're misguided, because there's a lot of people that are just so used to such a broken system and have accepted it, especially a lot of older people. They don't understand that there is a better way to manage your money and wealth. And we're not just talking about everyday investments here. We're talking about changing your entire money system, changing the system that you're under monetarily entirely. This is what we're talking about, guys. This is what crypto is, guys. This is bigger. This is bigger than just buying gold or silver and putting it in a safe, or buying stock for a company. We're talking about cryptocurrency, where you literally own a digital currency that could be either volatile or not. Sure, there are stable coins, but we're talking about you can buy cryptocurrency and it's worth, let's say, $1 today, and it could be worth 50 cents tomorrow or $2 tomorrow. This is a new system of money that a lot of people are learning about and are getting intrigued about, but maybe not so much at a time like this where crypto is so boring. And that does go to the fact that something as big as a collapse of FTX happened, and only now are we starting to see the perpetrator of all this, the head perpetrator, finally see some legal, well, not justice yet, but getting into the legal ramifications of what he's done. So, yeah, this system that we're in right now, it's broken, and everybody's starting to realize it. I mean, when the inflation is this bad and people are working and earning their paychecks and they keep getting less and less purchasing power and they had no say over it, something's got to give. And Sam Bankman-Fried facing justice for what he's done is a huge step in getting to where crypto's next level should be. I mean, for us to not even hear really anything about Sam Bankman-Fried for a year, it is kind of mind-numbing when you think about it. I mean, the economy and everything is so bad on top of it all, and people really did get scammed in FTX. I mean, they were putting money into FTX. They were investing money, buying crypto through FTX, and Sam Bankman-Fried was literally stealing the money. I mean, how could you have billions and billions and billions of dollars of cryptocurrency and digital assets be stolen right from under your nose? And when the whole fallout happened, we heard stories about Sam Bankman-Fried at home, relaxing, playing video games, not facing the justice, at least right away, that he deserved. So as this trial moves forward, we're going to see and hear about just how bad it really was and how criminal and all the activities that were going on at that time. I mean, right now we're kind of being left in the dark about everything that happened, but another thing I did want to talk about is how over time, more and more people are going to be weeded out of this market. They're going to be more and more entities and crypto companies and just people that are doing bad things in the market and trying to, instead of making money the righteous way and earning crypto and gaining adoption the righteous way, people over time are just going to weed themselves out, either by just being bad actors, committing fraud and thievery like Sam Bankman-Fried. I mean, as time goes on, this is only going to help crypto. As the technology moves forward, we're also going to have to, get used to these kind of people throwing a monkey wrench in the progress of cryptocurrency. The next thing I wanted to talk about today is how a lot of people like to look at the monthly gains for Bitcoin and try to time it based on that, try to time the market based on that. I mean, we just started October. We're only a few days into October, but last month was September, and September is usually a bad month for Bitcoin historically. And the reason I want to talk about why it's not a good idea to try to time the market based on what the market has done in history is that, yes, even though Bitcoin moves in cycles and, the market does seem to rhyme, may not do the exact same movement, but it does very similar things in a very similar time frame. It's not a good thing to say to yourself, well, I'm going to buy Bitcoin in September or not buy Bitcoin in September because the market usually does this in September. Guys, you have to start looking at Bitcoin and cryptocurrency as a system of value that can literally be completely different one day after you bought it. So you could buy Bitcoin or crypto. Let's say you buy Cardano or Ethereum, and Ethereum is $2,000 and Cardano is 50 cents the day you bought them. Guys, they can move, literally hunt for something like Ethereum. It can move thousands of dollars in a day if something really big, something big happens, like very good news coming out, or a whale buys Ethereum, or, like, for example, you buy Cardano, it's 50 cents one day. The next day, it could be $1. They have a good upgrade. If something goes well, a project onboards, and they have a lot of momentum. Like, you guys, you got to realize that this new age of money, yes, during a bear market, you could buy something and it could depreciate a lot in like a week or a day, a week, a month's time, or even a year. You could see almost, the price or the market cap get cut in half, or even worse, even more, like we've seen in this last bear market. But that's something we got to get used to. Like, this is not the traditional fiat, type of investing. Your money is not just sitting in a bank account, dwindling away due to inflation. I mean, if the price or the value of your assets go down, then they're probably going to go down significantly. That's how these market cycles work, guys. And if the market goes up, you're probably going to be rewarded just for being in the market during times like that, because what we've seen is the market likes to go up a lot all at once. So, like, for example, in late 2020, before I even entered cryptocurrency, if you look at the charts for something like Bitcoin especially, I believe it was like October or November of 2020, the Bitcoin's rise to from the thousands of dollars to the tens and 20,000s of dollars only took a few weeks. So I just want you to put that into perspective. People saw a 5x or 10x in basically only a month or two. And that is what's so important about investing into cryptocurrency, because people say to themselves, just invest over a long period of time and you'll eventually see gains. And we're talking about, like, traditional stocks and assets when it comes to that, like investing over maybe 10 to 20 years and finally seeing a decent enough return. But, you know, like cryptocurrency, it moves so fast, and some people don't understand that, yes, moving to the down or to the upside, like if it moves to the downside, it can move very fast. But when it moves to the upside, guys, those gains that you make in whatever relatively small period of time that is, that's life-changing wealth. Like, if you could do a 10, 20, 30, 50x during the course of a bull market, which only lasts really a year or so, more or less, basically due to the historical data that we have, the information that we're working with. I mean, in a year, you could go from 0 to $1 million. Like, that's what this channel's called. That's what, you know, having a long-term strategy is important, but you could be, you know, down for so many years or flat and finally get back to what you probably originally invested. But then a bull market, maybe a cycle or two later than when you've started, it comes around, and because you've been so long-term in the market, putting your crumbs in when you could, instead of just leaving it in a bank account, that's when you'll finally start seeing the rewards. So, you know, crypto is one of those things, like, you can't just say to yourself, well, you know, the market's usually good in October, November, and December, and I'm gonna just buy before then, and then I'm gonna sell in January, because, you know, that's when it's supposed to be the best month. So if I buy, you know, Bitcoin and it goes, you know, let's say it remains flat for October, November, December, I'm just gonna say to myself, well, it didn't go up as I thought it would in those months, so I might as well sell, because it's only gonna get worse now because it's not October, November, December anymore. And guys, that's not how it works. Like, you may be investing during a time period where it's supposed to be the best time for cryptocurrency and nothing happens. Or you may invest, like we just seen with this last September, you may invest in September and Bitcoin has the first green September, positive September in like 6 years or whatever the case is this year. Like, guys, you can't, like, you're going to start over time, you're going to start realizing that investing in cryptocurrency is about investing through cycles. It's not about a year or 2 years. It's about, okay, I've invested roughly 50,000 or 100,000 over the course of an entire cycle. You know, I put whatever crumbs I had left of my paycheck, and whenever I got extra money or whatever I got a tax return or whatever the case may be, I invested that money, and over the course of 4 or 5 years, I put into $50,000 to $100,000, and that $50,000 to $100,000 changed my life because I stuck it out, even though I was investing through a time where the value of my assets went down 90 to 95%. And if you survived a year like last year, like 2022, you know, you're going to understand what losing money feels like. And that goes for pretty much every market, guys. Like, guys, last year, 2022, there was literally no survivors. I mean, if you got out of 2022 with gains, if you made gains in 2022, the market that you are investing into or trading in is probably, you know, its own niche, more obscure than the traditional ways of investing money, like crypto, stocks, you know, even gold and silver, even collectible markets. All the collectible markets came down all at once after the bull runs of 2021. I mean, you know, you had like the professional baseball, basketball, hockey card markets, like, you know, the playing or the cards that you could buy, like, let's say you get a LeBron James rookie card or a Derek Jeter rookie card or whatever the case may be. The prices were so inflated in 2021. I mean, there were some cards and collectibles and decks going for hundreds of thousands of dollars, and then when the markets all came down all at once, those same collectibles that you were investing in, or comic books or Funko Pops or whatever the case may be, they came down in value very, very tremendously. So, you know, you can't time Bitcoin based off a month. You can't time all of crypto based off a month. You have to say to yourself, well, you know, not only am I going to invest in this September, even though September is a bad month, I'm going to invest in the next 5 Septembers, and I'm going to invest the next 5 years. And you know, and if in 5 years I still haven't met my financial goals, We're going to have to prolong the horizon to 10 years. And guys, I'm already at a point where I'm so done with fiat money. And I already kind of understand the way market cycles work. I mean, if I make money in this next bull run coming up in any way, I'm still thinking of having the same strategy where keeping all my assets in crypto is probably the way I'm going to live the rest of my life. I'm not really even thinking about, trying to stack a fiat bank account with cash. I mean, it's just so lame to me. I mean, even knowing that Bitcoin can come down 70 to 85% in a bear market, at least if I leave my my net worth or value into something like Bitcoin, I know there's only a certain amount of Bitcoins that exist. I know that I still own the Bitcoin. There's no middleman. It's in my custody. I can transfer the Bitcoin anywhere I want. I can use the Bitcoin for anything I want. I mean, this is important to understand when it comes to, owning assets or owning money, or what we talked about earlier, changing the system of money that you're on. Because this old fiat system of money there's always a middleman. There's always someone telling you, you can't do this with your money. We don't have the money. If you go to the bank and you want to take out a large sum of money, they can tell you no. They can tell you, we need more information. Why do you need the money? Think about it. You make a certain amount of money and you go to the bank and you try to get your money and they're questioning you over why you need it. It's it's my money. I shouldn't have to explain to anybody what or why I want to do with my money. If you're actually doing something nefarious and people are onto you or trying to figure out if you're doing it for illegal activity, that's always going to be a whole nother story. But we're just talking about good, honest people earning a paycheck, and maybe they've saved up money for years and years at a time, and then they finally go to use that money for something and their bank tells them they can't use it, they can't take it out. I mean, that's absolutely absurd. And with something like crypto, that completely solves that. And not only does it solve it, you get to use and do whatever you want with your, Bitcoin, for example, at any time you want. And that is just self-sovereignty in a nutshell. I mean, money is one of those things that it's universal, even though we all exchange in different fiat currencies. If you live in America or you live in Europe, everyone's using a different currency. But when it comes to something like crypto, it's universal. When it comes to the concept of money, it's universal. So we're in a situation where it's do you really want to have your wealth in something where you don't have full control of it? And I think that's where we're moving towards as a society, as a whole. People just saying, you know what, I'm fed up with this system. I'm going to take my wealth, put it in another system, even if it's not 100%, like someone like me. I mean, at this point, guys, personally, as you'll probably learn more and more over time on this channel, I am so bearish on fiat, money, currencies, systems. I'm so bearish on, traditional stocks. I mean, there's a few stocks that I'm interested in, but, just knowing about cryptocurrency, I think to myself, will I ever buy a stock? Will I ever invest in anything ever again other than cryptocurrency? I mean, it's hard for me to imagine right now, but things could change. But crypto right now, I mean, in 2023, let's imagine you just found crypto in 2023. You've probably found, you probably found the gold mine. You've probably found, an asset class that's so untapped when it comes to potential and is so beaten up, even in comparison to other markets. I mean, Bitcoin, it hasn't done well in the last couple of years, but if you look at a guy like Michael Saylor that's invested very large sums of money in Bitcoin, he's even said recently, if he were to have put the money into anything else, into any other asset, he would have lost more. So we have people, and I know personally people that are in finance that are very good with money and very smart with a lot of things in general, but they fail to see that where this world is headed, where, I think they fail to see decentralization as a whole. I mean, decentralization is so important, guys. I mean, this is why I love a cryptocurrency like Cardano. I mean, I was studying something about Cardano last night. I was doing some research on some new developments on Cardano last night. And guys, I could tell you that it is one of my favorite cryptocurrencies because they value decentralization. We're hearing about this huge comeback with Solana, and I'm just not interested because I know that Solana as a whole isn't as decentralized and it's not as developed on as a cryptocurrency blockchain ecosystem like Cardano. And over time, we're going to talk about the coins that I hold and why I hold them and why I hold only a relatively small amount and why I do believe it's good to, consolidate most of your wealth into only a few assets that you believe in, because you can keep your conviction. You don't have to worry about so many different coins. But, that's more of a topic for another video. I'm just kind of ranting right now about why it's so hard to time the market. It's so hard to, just look at data based on a month or a certain time frame and say to yourself, yeah, I'm never going to invest in September because September is always bad. I'm always going to invest in April because April's good. Like, guys, making moves costs money. You're going to realize that. Just taking profits costs money. Buying and selling crypto, you'll always sell to a spread that's not in your favor. This is how it works. You have to, say to yourself, I believe in Bitcoin, so I'm going to buy Bitcoin, and I believe in Ethereum, so I'm going to buy Ethereum. And the moment you start saying, wow, look at coin 250, that looks interesting, and you put some money into coin 250, and let's say, something bad happens, or you hear some FUD about coin 250, or the volatility is just, unsustainable, like your coin drops over 25% in a day and it doesn't recover, and you say to yourself, well, I could have put that money into Bitcoin, and even though it was a down day, let's say you have a red day, Bitcoin's only down a few percent, while this coin 250 that you bought is down 25%. So that's another thing, like just the action of putting your money somewhere is important. You got to understand that every move you make is important. Sure, you may go out and make money, and say to yourself, well, crypto is volatile. If I don't spread my buys around to different cryptocurrencies, I might miss these massive pumps. Guys, being in one crypto, for example, let's say you only bought one cryptocurrency and that cryptocurrency does well, all the money that you've ever made that you've invested into that crypto moves up. You're not hoping that another cryptocurrency that you've bought, a separate cryptocurrency, goes up similarly to that. And another thing is, a lot of people don't understand that if you have your money in a crypto asset, and let's say it does have the potential or opportunity to do well, if there is another cryptocurrency that does just as well but moves first, you've missed the fastest and greatest train. If you have your money in an asset that moves first, you can take that wealth and spread it out to whatever other assets you believe have the power to do well. Like, guys, you have to think logically when you do things in crypto or invest. You can't just say, I'm going to put my money into whatever and I'm only going to put it in a certain time and expect to do well. This is a marathon. This is a long-term game. This is you buying, Cardano, or for example, in my personal experience, me buying Cardano at $1.50 and thinking I was a genius. And, you think you're a genius when you buy a coin when it's, not doing as bad as you think it can get. And then Cardano goes to $1. And you say to yourself, well, if I buy Cardano at $1, I'm a genius. And then it drops to 75 cents, 50 cents, and you buy it there, and you say to yourself, well, yeah, I'm a genius. It's going to go to $10 one day. So me buying it at $1, I'm a genius. And then it goes, or 50 cents. And then it drops to where we are now, around 30 cents. And then you're going to start saying to yourself, well, no matter how bad this market gets, I better start spreading out or having a longer term mindset when it comes to investing, because if I don't, then I'm going to take these hits in the short term and say to myself, well, I'm just going to sell out of this because I never see any green, so this is a scam and I'm out. Guys, you'll never succeed with that type of mindset. Okay, the third thing I want to talk about that's kind of similar to the first thing we talked about Sam Bankman-Fried and FTX and all the fallout. We got a company like Celsius, which is another crypto, borrowing platform, lending platform. Technically, I guess they were an exchange as well. Excuse me. They collapsed because of very similar things to what FTX and Sam Bankman-Fried was doing. Alex Mashinsky, he was saying everything was fine, put your money into Celsius, you can earn a yield. The whole thing was just basically waiting for Celsius and Alex Mashinsky at Celsius to basically pull the plug. And, when we talk about rug pulls on cryptocurrencies, yeah, it happens to exchanges too. Like the rug on a crypto exchange or borrowing platform, the rug can get pulled. Like this is real life, guys. Like people lost everything with Celsius. They put their life savings into it because they saw that it gave them an opportunity to buy and hold cryptocurrency and at the same time earn a yield in a centralized way. But the problem is you don't own the crypto as soon as you put your crypto on a platform like Celsius. You have to buy the crypto and move it off. You have to. You have to have self-custody when it comes to crypto assets. That's the point of crypto. That's why crypto was made. If you look at the white papers for Bitcoin, which is the first cryptocurrency, they said it was the invention of Bitcoin is a counter to what happened during the financial crisis of 2008. Like the financial crisis of 2008 showed everybody that your money isn't safe anywhere. You can put it in stocks and the entire stock market will collapse like a house of cards. And when it comes to the banks, they'll get bailed out by, the government, and there won't be any bailout for you. So, owning what you buy is so important. And anybody that watches this channel that does centralized staking, I would tell you right now that if you've done centralized staking and you've gotten away with it without being harmed by it, you're lucky, and you should probably, take a different route with how you want to manage your finances, guys. I mean, cryptocurrency, like, people are so predatory in cryptocurrency. They feel like everything is owed to them, especially people that own exchanges. They think that they can just take your crypto assets and you have no say over it. And guys, they can. You're basically signing over your money to them in exchange for a small percentage that really, at the end of the day, if your funds aren't safe, then what's the point of even having those funds and buying them in the first place? You have to get a cold storage wallet. You have to, get a few hot wallets, secure the phrases, remember them in your head, do whatever you got to do. But you cannot, I repeat, you cannot leave your money on centralized exchanges. And why I brought up Celsius is they're going through a restart, and, they may come out with, different owners, different leaders, a different path forward, try to, go a completely different route than how they were operated in the past. Like I said, they might even have a whole different team altogether running the show. But guys, it doesn't matter what exchange or platform you use to get crypto. You just take it off right away. You put it into a personal wallet, and with a seed phrase that only you know, and it's protected by you. And, that's how you have to go through this crypto journey. You can't go through this crypto journey, you go to sleep one night and then the next morning Celsius, went under, and Alex Mashinsky ran off like a bank robber with all your cryptocurrency. So no matter what, when a platform like Celsius restarts, let them restart. And let them collapse again and fail again if they make the wrong decisions. This is what's going to happen over time, guys. People are going to fail. Centralized entities, centralized exchanges, even decentralized exchanges will fail if they don't have proper risk management, if they're doing nefarious things with your money, if they're, telling you can earn a yield, but really their plan is to, just take all the money and run at some point anyway. Then you gotta figure out a different way of you know, you got to have a different mindset of, you know, managing your money, guys. Crypto is about your own ownership, like having ownership over your funds, and that's just so important, guys. And yep, long live stream today, but I believe we did cover everything I wanted to cover. Very soon I'm going to talk about the next 3 coins in my portfolio, and I'm not going to hide what that is. We'll say it right now. The next 3, I already had, explained how I own Bitcoin, Ethereum, and XRP, and why in the previous video, very briefly. But, you know, Bitcoin, Ethereum, XRP, one of my, you know, higher picks. And the next 3 coins we're going to talk about when I get the chance is going to be Cardano, Dogecoin, and Polygon Matic. So I don't own a lot of some. I own more crypto of, you know, I own more Cardano and Dogecoin than I do Matic, but Matic is still a coin I'm looking at. So next video we'll talk about that, guys, and what coins I like, what coins I have my eye on, even if I'm not invested into them. And I'll see you next time. This is 02 Million Crypto.